All right, back to work. Boy, what a fantastic day today, right? Everything just clicked. One of those days you love being a trader, but it's back to work tonight. I know a lot of you guys made money out there today, so well done on that. But I don't care how much money you made today. Let's get back to work. Let's get refocused and let's finish the week strong tomorrow. It is Thursday evening. We have a very big, really very excited for a big Friday trading session coming tomorrow morning. I have a lot of great trades to talk about tonight. We get the bear traps we talked about in last night's video. Got these nice big short squeezes right now on the Nasdaq and the S&P. And of course, in tonight's video, we'll talk about the best ways to make money in the aftermath or trading these short squeezes on the S&P and the Nasdaq. I'm going to go over all my favorite trades in the video here tonight, that we have a game plan to make some money on the squeezes going into Friday's trading session. Before we jump in though and get the party going tonight, I'm getting excited just thinking about it right now. Before we jump in though, make sure you subscribe to our channel, that way you don't miss tomorrow night's video. And if you enjoy this stuff, hit that like button, give me a shout out, give me a holler down in the comment section below. Thank you so much for tuning in, supporting the channel. But enough of the intro, Joe. You're running late here tonight. Yeah, we had some data issues with NinjaTrader. I do apologize if you're with us this afternoon in the afternoon trading session. Boy, that was a bit messy, but we're back online here now. And I couldn't finish up the day here without publishing this video here. Where are the best trades setting up here for tomorrow? Well, I'll tell you, everything's very bullish, right? After that beautiful bear trap into short squeezes on the S&P and the Nasdaq. Now, the S&P and Nasdaq, they're both very similar at first glance. They're very bullish, but I'll tell you, you will see tonight, we'll go a bit wider. We'll look at those 60-minute charts tonight, and you'll see right away that even though the S&P and Nasdaq at first glance are similar, they have two very different ways to trade them. We have a lot to cover on my favorite trades on the Emini and the Nasdaq. Over on oil, oil is rotating off the low of that trading range. If you watched last night's video, we are in full-on range rotation mode right now. So looking for a rotation back up into that trading range. There are probably 4, maybe 5 different tactics I'm watching for tomorrow on oil. You'll definitely want to make sure you watch all the way to the oil section of the video here tonight. So lots of trades we're tracking for tomorrow. Before we jump in though and talk about the differences between the S&P and the Nasdaq and how to make money on it tomorrow, before we do that though, let's check the calendar for tomorrow. Let's all get on the same page here because tomorrow's a Friday. Now, there's no major news for tomorrow. Everyone's still waiting for that CPI number next Tuesday, that FOMC announcement next Wednesday. We got rollover coming at some point next week as well. So no major news for tomorrow. But let's talk about Fridays. If you watch these videos each week, you probably know what I'm going to say. My mindset on a Friday morning is always the same. Get in early and leave a runner. Okay, Fridays love to run. Volume gets a bit lower on a Friday afternoon. So my mindset is find some trades. I'm not a big fan of getting into positions afternoon, right? Basically after lunch on a Friday, things get a bit thinner, things aren't as consistent. But find those trades early tomorrow morning and promise me to leave a little piece open, right? Because if you've been trading the last few months, you know that Fridays, they love to get thin and they love to just run and run and run. So early in, right? Not so much early out, but leave a piece to be a runner. Keep that in mind for tomorrow. And also too, I talked about this last night as well. There'll be no video newsletters next week. Next week is quad witching. I'll be taking some time off in the afternoons and the evenings next week to refresh, refocus, and we'll come back after the Juneteenth holiday is Monday, June 19th, all right? So hate to leave you guys hanging, but every quarter I try to take some time off the YouTube videos, get some new stuff done for SOT students to get refreshed, refocused, and back after. So back here on the 20th. Now, back to our charts though, right? Enough of the news, enough of the quad witching next week. The money is made on the charts, right? Now, speaking of money, if you like making money, I would definitely make sure you watch the entire video here tonight because everything I talk about, every trade I talk about tonight can be applied to your favorite market. So don't go clicking off on me after the S&P. I will wrap this stuff all together, and everything we talk about can apply to NASDAQ or the crude oil. A couple things here first, guys, before we jump in. These are tick charts. I always use tick charts. Tick charts make everything easier. We talk about why I like tick charts in our free trading course on the website. This is the 21 EMA. It's not the only indicator that I use, but it's the one indicator that'll make it a lot easier to find more winning trades. 21 EMA on the chart there. So what's the most important factor that we have right now on the E-mini or the SPY? We're definitely bullish, right? We're definitely bullish. But like I mentioned in the introduction here, there's a little bit more that you have to understand about the market right now. Let's go out one layer here and let's go up to a 60-minute chart. Right now on the 60-minute chart, you'll notice we are a bullish market into a trading range. Now, if you've taken my free trading classes, you know that ranges love to rotate, right? They rotate back and forth. They go up, they go down, they go up, they go down. And now what do you see is happening right now? Now we're rotating, going higher. So there's no doubt about that we're bullish, right? We're definitely bullish right now. But as you can see, we're running into resistance. So now the buyers, right? The buyers have all of the control. And they're going to try, most likely, to break out of this trading range. Oftentimes, we see these, like back here, pop up into a range, pull back, and they break through. So the buyers definitely have that on their mind. They're trying to break through the high of that trading range right now. But we have to be a bit careful, right? We don't want to buy into these highs here. Now, that's a very different story than we have the NASDAQ, right? The NASDAQ is, well, I won't spoil it. We'll talk about that here in a moment, right? But just be aware, the NASDAQ is quite different than this. And we'll talk about why it's different and how to trade it because of the difference here later on in the video. So when I look at the 60-minute chart, I know we're bullish, but I have to wait for either a breakout going higher or I have to buy as low as I can, right? That's the key. We have to buy as low as we can. Now, let's go back to our main chart. I like tick charts again because they make everything easier. Now, looking at the tick chart right now, here's what's happening on the tick chart. The day began in a trading range. Okay, we then saw a breakout. We oftentimes see what are called breakout pullbacks. Okay, basically, you take that trading range and you look for a pullback down around, in this case, the high of that trading range. So if you understand the 60-minute chart right now being bullish, rotating, we know now, right? We know this area up here, this is where the big area of resistance is. I want to be a buyer, but I don't want to buy too high, right? I want to buy pullbacks. I want to try to absorb some of those sellers here. So this is definitely where my favorite trade is going to be on the S&P. Now, later on in the video, we'll definitely talk about, how to trade this stuff if it goes higher, because the NASDAQ, like I said earlier, NASDAQ might not need that deep pullback. And we'll talk about why I say that here in a moment. Now, on that pullback, right? On that pullback, I have a lot of students that like to get aggressive on these pullbacks. I'm anticipating that pullback right now, right? That would be where my favorite trade would be for tomorrow. That way I'm not buying too high, right? How would I sell that pullback? The way you sell it is with what's called a bull trap, okay? Trap patterns. So on the pullback going lower, now remember, anytime we go against the overall momentum, I always tell my students, these are half-size positions, right? These are quarter-size positions. These are not full-size positions. But just like we learn in our free trading classes, right, which I know most of you guys are taking right now, this is a bull trap, okay? So on the move going lower, if we're anticipating that pullback on the way down, what I'll do is I'll look for, again, it's called a trap pattern, right? A basic trap setup above that high. Okay, now look at how that pattern sets up, right? It's a lower low and a trap high. You guys are learning more about the signal candles and things like that in the free trading course. Now, once we get down around the low of the channel, once we get down around the high of that trading range, this is now we start looking for buyers to come back in because, again, we're trying to buy as low as we can. Now, in my free trading course, I talk about what's called a failure pattern. okay, a failure pattern. Now, this will be what's called a two-try failure, okay? And the reason why you want a two-try failure in this example is because that'll be a relatively deep pullback. Momentum will be pretty strong, right, for the bears at this point. So rather than trying to pick a bottom on this, what you do is, like back here, right, like we talked about last night, you go lower, you let the bears try once, the bears try twice, right, and you literally buy into their stops. Okay, so we literally talked about this 24 hours ago, right? That seller failure off of that low. So now over here we now get around the low of that channel. We get into this, again, into this zone down here. It's tough to tell exactly where. We don't try to pick the bottom. What we do is we wait for the bears to come in and show us they're taking the bait. Okay, and the reason why I do it this way is because once those bears get short, now we have a potential short squeeze. Now we have a stop run, right, that oftentimes produces, well, one of my first mentors many, many years ago would always say, Joe, find an area where the buyers are buying and the sellers are buying, right? Think about this scenario. If we can trap the bears in right now, everybody's a buyer down here, right? Because the buyers are buying, they're buying low, and the sellers are going to be buying when they get stopped out on their short. Right? Everyone's buying, okay? These tend to really punch and run back higher. One thing I always sort of do is grab that failure into that pullback combination, okay? If you guys have taken that free trading course, there are probably 100 or so examples, right, of that failure into pullback combo in that video archive, right, on the website, right? So as we go lower, it's the bull trap. It's the bull trap, go right again above the high, going lower. And then remember, don't pick the bottom, trap the bears in, let them try a couple times. Everyone's buying, right? Stops as fuel. And then as it goes higher here, right? As it goes higher, think about that first pullback, right? That pullback combination, okay? Like you guys are learning in that free video series, which remind me, I know most of you guys watching tonight have taken that free video course. I'm going to be talking a lot about these setups. If you haven't taken that free video series yet, that free trading course, I'll put a link up there for you in the upper right-hand corner. Grab that link, take that free trading class, because the strategy you'll learn in that short video series will teach you a simple trick to know exactly where the best winning trades will be each day. And I'll teach you my 4 favorite entry patterns to help you start making money. Things like failures, traps, pullback combinations. I have hundreds of examples of what I just talked about, all linked up in that free video series. So grab that link that popped up in the upper right-hand corner. I'll put all the important links, by the way, I'll put those down in the description of the video here tonight. All right. So just be aware of that, right? So as we go lower, bull traps on the way down, right? And then trapping in and back up. There's one more thing I want to talk about here, because we are, and again, I'm going to talk about if we go higher here. Trust me, that will be next up on my list here. But listen, we're running into overhead resistance. Okay, I want to make sure you're all aware of what we do as a range on here. Okay, if we go up into a trading range, this could easily happen. Now, I'm going to make an educated guess. It could be here, it could be higher, I don't know. Okay, but anytime we see a bullish move like this into a trading range, what we're going to do is start looking for areas of support down below the range. And for the most part, it's the same strategy. The one difference, though, is the minute we start going sideways, remember, ranges act like magnets, right? They act like magnets. So if we start going sideways here in the chart, now that short off the high, no more, okay? Capiche, right? Ixnay on the short A if we start going sideways, okay? That makes sense? Okay, so if it starts going sideways in a range, that range is just too much of a magnet. Now I'm no longer looking for a short, okay? That very, very clear. Now, a couple things I'm going to do is find support. Find support. Okay, find support levels underneath that trading range. And there are 2 basic entry patterns I want to look for here. Okay, these are very, very important. Watch closely. If we get a deep pullback now, which again is my preferred entry for tomorrow, the game plan stays pretty much the same. Okay, bears try once, bears try twice. Everyone's buying, right? And we look for that failure pull back and back up into that range, right? Targets, of course, are back up to retest the high, okay? Not a lot changes there. What I want you to remember, though, is if all we get, sorry about this, if all we get is a shallow pullback, right? A shallow pullback. In other words, we're not getting that deep pullback. We're not getting far enough off the high of that big 60-minute range we talked about. How do we trade a shallow pullback? With a bear trap. Whenever I'm concerned about buying too high, what do? We trade traps. In other words, bears once, bears twice, and that trap. Okay? Now notice how this pattern sets up. Okay? It's a higher high in price, and it's a trap below that low. It's very, very important that we see a higher high in price on that. Okay? Because that's how bears get short. Right? So as we pull back, bears try once, they try again, and want to get as low as we can, because again, we don't want to be buying too high, right, into this area of resistance on the 60-minute. Okay? So those are my favorite trades setting up here on the E-mini if we go sideways or if we get that nice deep pullback. Now, I want to talk about if we keep going higher. All right, because this could easily happen. Fridays love to run. The last couple of Fridays, we've had some very big moves. Let's talk about that now on the Nasdaq. Okay, over on the NQ. The Nasdaq, very, very bullish right now, as you can see here, right? Nice bull move. But like I promised in the introduction, there's a very big difference here right now between the Nasdaq and the S&P. Let's go back to the 60-minute chart now, and let's take a look. Okay, we have on the Nasdaq a very similar but quite different scenario than the S&P. It's a bullish move into a trading range. Now remember, ranges are magnets and ranges love to rotate. So the amount going lower now, where do you think the buyers want to go? They're going to want to go back up into that trading range. So as you can see, the buyers have a hell of a lot more space, open space on the Nasdaq than the S&P. This means buyers can be quite a bit more aggressive to a point, right? Until they reach up around these highs. Now, I should also mention too, whenever we get these bull moves into ranges and we get these big breakouts like this momentum can really build. And so again, we know right now, we know the buyers where they want to go. They want to take out these range highs, right? Basically where the S&P is right now. But can you anticipate where you think the market might want to go next? Yeah, it'll want to keep on going up into that, what we call a pendulum swing, right? The amount below the range, the amount above the range, right? The S&P, notice the S&P for a second. The S&P does not have that much momentum, right? It's not like back here on the S&P, like this one, pops up, goes sideways, pull back, right? Like look at all that momentum now. No wonder it blasted, right? No wonder it ripped those highs, right? We don't have that same juice coming off of that low, right? All the more reason on the S&P to make sure we really try to buy as low as we can until we see a breakout. On the NASDAQ has a lot of momentum at its back right now and quite a bit of open space, right? Until we take out these highs up overhead. So a similar game plan, but a little bit more aggressive, I guess you would say, right? On the NASDAQ. Okay, let's talk about this now on the tick chart, right? Again, we trade off tick charts in our trade room because just makes everything easier, a hell of a lot easier than time charts. Now, there's that range up overhead on the NASDAQ. Okay, and then there is that, up top there, open space. Okay, now we have a lot more open space and a little more momentum. We can be a little more aggressive. Okay, there is one very, very important kind of dance that I want you to learn, and we saw it actually today on the S&P. Let me quickly go back to the S&P real quickly here, and I want to show you something on the S&P tick chart, okay? Because this is ultimately the exact same game plan we're looking for in the NASDAQ. I want you to look at this area right here. Notice how we get that strong run up, that shallow pullback, that higher high in price, and that is what? That's a bear trap. Okay, bear trap then goes higher. Then we get a bit too high, right, on the chart. And what happens? We pull back underneath the 21 moving average, right? And we get a failure pattern right there. Again, if you've taken my free trading classes, you know this sequence already, right? This is pretty common. We get a lot of examples of that in that free video series. Here's the key. Okay, here's the key. On the way higher, On the way higher, we try to buy as low as we can with trap setups. Once we start getting too high up, right? Once we start getting too close now to those overhead levels of resistance, now we wait for the pullback and we look for a seller failure below the moving average. Makes sense, right? At the same time, I've got channels off the low, off the high, channels right off the low. Okay, this sequence right here, this sequence is what we're looking for on the NASDAQ coming tomorrow. On the way up, it's bear traps. On the way, again, as we go higher, deeper pullback, and we look to, remember that analogy before? Everyone's buying, right? Buyers are buying the dip. Sellers getting squeezed. They're buying their way out, right? That's a failure pattern, which again, I know most of you guys have learned already. Okay, so this is the sequence. Now, let's go back to that NASDAQ chart now. And now think about now as we make our way going higher. Okay, very, very important. If we do end up squeezing here right now, continue, which again has a lot of potential, right, for tomorrow. If we start going higher here, let me get rid of this channel here for a moment because it's not a good example for anybody right now. As we go higher here, what do? We look for traps, right? Remember, strong move, shallow pullback, higher high in price, and what do we say? Traps, baby, right? Traps off that low, right? Makes sense? Like I mentioned before in the S&P. Now, we start getting way high up, right? No. We don't want to buy into those highs now. Now what do? Now we wait for that correction, right? Get underneath the moving average. Usually these will be some sort of channel, right? There'll be some sort of channel coming off these highs, off that low. I love it whenever I can use those prior highs as an area of support, right? Then what do? We get below the moving average. We look to get the bears to commit. Remember that metaphor, that analogy used before, right? Everyone's buying, right? The buyers are buying the dip. The sellers, if they get stopped out, there's that failure, right? You run those stops, right? Going higher, failure pattern, pullback combination, right? And then up from there. Does that make sense, right? Makes sense there? Again, traps on the way up, okay? Traps on the way up. And then as we start getting a bit too high up here, right? Don't buy high. We wait for the deep pullback. We don't short it, right? Because we're too bullish to want to short that pullback, right? We don't short the pullback. We let the bears, we let the inexperienced traders, we let them get short, and we literally buy right into those stop losses. All right, we see a lot of these. This is that dance, right? This is that dance that we talk about a lot on these videos. We're buying traps on the way up and then waiting for those pullbacks off support, and trying to go back ultimately and retest these highs and take out, right, those bullish objectives we talked about on the 60-minute chart. All right, now let's revisit the idea of a range. Okay, I mentioned earlier that the S&P may go into a range. Okay, so what if we don't go higher on the NASDAQ? If we don't, what if we go lower? If we go lower, now if you're a student of mine, you know this already, right? Anytime we see a strong move in one direction, what do we expect? A pullback and a retest of that high. Okay, we call this mission accomplished in our trade room, right? So mission accomplished. Now, at this point, remember, the buyers are buying low. The buyers will then take their profit at the high. I think there's a very good likelihood because of the 60-minute chart we talked about earlier, we keep going, right? So you get the game plan if we keep going higher. But what if we don't? You know, what if we don't? Who knows? It's a crazy world out there right now. Who knows what's going to happen? What if we don't? What if we pull back? Now this starts to become a trading range right here. Okay? This becomes a range. And it's very, very simple. If we pull back off this high right now, I want to get underneath this area. Well, think about it, right? If you're a buyer and you know there's a big magnet overhead here right now, where do you think, again, unless we can get some evidence going higher, right? Unless we can go through the highs here, if we start pulling back, where do you think buyers would say, where can I buy low, right? Where's a good place where buyers could buy low? Absolutely, right below this low. Okay, now remember, I'm not a big fan of picking bottoms. It can be difficult to pick a bottom. What I'd rather do is get underneath that low, right? Don't try to pick the bottom down here. Let them take out that bottom. And then as the bears come in a bull market, let those bears come in, let them try a couple times here, and then use their stops, right? Use their exits as fuel for that run back higher. Okay? Again, think of this now as kind of one big range forming. And again, you'll learn this in the free trading course, but ranges are magnets. We focus on failures below that low. All right. Now there could be some variations of this. You know, the Nasdaq can be wild sometimes. Sometimes it'll kind of V bottom off of that low, you know, kind of V bottom like that off of that low. If that happens and it kind of V bottoms, the goal is a trap setup, right? If it V bottoms, remember, you want to buy as low as you can, always, right? Always. So if you see a V bottom on this thing back up, it's a very big difference between pulling back, trapping, right, and up from there. If it V bottoms off that low, this is how you want to trade it, off that low. Okay, by the way, that could also be similar on the S&P as well, right? Back to the S&P for a second. Right? If we end up rolling lower here and we don't get that 1-2 failure back up again, if it was to just V bottom right off of that low, right? V bottom like that and begin to grind. How do you trade that? You don't chase it. That's one thing you do not do, right? You don't chase it going higher. You want to buy low, not buy high. Okay, I call these the FOMO trade in our trade room, right? Because that voice in your head will say, get me in. But the trick is to go out, find that trend line, find that channel, okay, and then go out, find those swings, and you want that trap, right? You want to buy as low as you can if they bounce really hard, right, off of that low. All right, so same basic idea applies to the S&P as well. All right, I apologize for the back and forth. Sometimes I forget some of the ideas here. And obviously we'll cover this, of course, in the trade room, which we get together every morning at 8 o'clock Eastern time. All right, so NASDAQ is looking pretty good, right? Now they're pretty good in the NASDAQ here. Remember, keep an eye out for a range in the NASDAQ. Remember, as we go higher, right? As we go higher, it's traps on the way up. And then deep pullbacks, trap in, right? Moving average, everyone's buying off that low. All right. If you got questions, hit me up in the comment section below. I'll be happy to help you out more there. All right, let's wrap things up tonight on the crude oil. Oil doing oil things right now, being all crazy. It's not that crazy, though. It's not that crazy. On the oil right now, very, very strong move down. Anytime we see a strong move in one direction, we're expecting what? A retest of that level. That's the first thing that comes to mind. But let's take one step back. Let's take a step back here to the 60-minute. And we've now developed into a new trading range on the 60-minute chart. If you watched last night's video, I think I made it pretty clear last night, right? Our job right now is to buy low, sell high, and basically trade rotation back and forth. So this is the trading range on the oil right now. Well, obviously went lower, and we're now trying to ultimately take out these highs above here. There's a very good chance, because of that strong move down, that we get one more leg lower. But the goal is we want to be buying down here back up into that trading range, right? Trading this thing going higher, right? Back up into that range. As we get back to the high of the range, we now look to short back down into the range, keep buying low, keep selling high, rinse and repeat. All right, guys? So knowing that range, of course, is the magnet, let's now zoom in now on the main tick chart. And now let's think about how can we trade that rotation going higher here. There are really three different scenarios if we go lower. The first one is we've already got the bears now trying once and trying twice to go lower. Right? We talk about this called the 2-try rule. We talk about this throughout our entire video course, both in the free trading classes and our members classes, the 2-try rule. Whenever we have a strong move in one direction, we expect a retest of that level, and we'll give this case the sellers 2 tries to do it. So at this point, if the bears don't get their act together here, it will end up squeezing back up into that trading range. Because of that, I like the idea of getting below the 21 moving average, trapping the bears in below it, and remember, everyone's buying, right? Buyers are buying off the low. Sellers get squeezed. They become buyers as well. So a failure pattern off the low of that channel. I also like what I call a bear trap, or what you will call a bear trap, below that low as well. Okay, that low could be a bear trap. Now remember, as you guys learn in our free course, trap setups have to have a good signal candle. So you want to make sure you have a good strong signal closing above that moving average, trapping below that 69.94. In last night's video, we called this a crown reversal pattern. It's basically what it is, right? It's basically bears trying once, bears trying twice, And you want to make sure you get a good signal candle on it, closing firmly, or as I always say, convincingly well, right, strong, above that moving average. That will be your 2-try failure with a trap. And again, we're trying to go back up into that trading range. That strong move down definitely suggests we may take out that low as well. We talked about this last night, I believe. We are always excited for what are called double bottom reversals. If we do retest that low, I'm not trying to sell down here, at least not at this point, where we know right now that range above us is the magnet. If we do end up retesting that low, momentum becomes quite strong, right? Yeah, this is quite strong momentum. So rather than trying to pick the bottom on this, what I'll do is I'll simply wait for those bears to come out, let them try twice, and buy right into those stops. Again, everybody buying in this scenario, right? Buyers are buying off the low, and once the sellers get stopped out, they become buyers as well because they have no other way to get out of a short position, right? Keep an eye out too for that failure into pullback combination that I talked about earlier in the video. Where do you think the first target would be on this one? Right? Grab that failure, grab that pullback. Where's the target? The target's right back up to retest the high. And of course, tomorrow's a Friday, so you better leave that runner, right? Because the markets love to float. They love to run. So definitely leave that runner to the opposite side of that trading range. If we were to go higher, you know the answer to this. If we were to go higher, if we didn't get the pullback, what would you do? How would you trade it? What's the concern? We don't want to buy high, right? What do we do whenever the market kind of races higher? We buy with traps, right? We buy below prior swings. So if we don't get the pullback, right? If we do end up going a higher high here right now, that trap. And again, make sure you get the right signal candle, which you guys talk about, right, in the free video series. All right. So buy those traps, right, as we're going higher. And then once we get up around the highs here, right? We don't buy high in a range. No, we don't. We sell high. How would you sell? How would you sell a very strong bull market like this? There's two ways to do it. One is a crown reversal. We look for the buyers coming in, trying once, buyers twice, and we get that trap high, right? That's one way to do it. Good example right here, right? We go up. The buyers once, the buyers twice. There's that trap high, right? And back down. Okay, remember, anytime we see a lot of strength like this, you have to anticipate a pullback and a retest. Okay, so if you want to short that thing, you can. But remember, it's very difficult to pick the top on that. The buyers try a couple times, and I want that trap high, right? That bull trap, right? That bull trap off the high there, all right? The other way to do it is to wait for the retest. Mission accomplished, right? Once with the retest, then we can be a little more aggressive, right? Then we can go out and go, okay, buyers have now retested their high, mission accomplished. All the experienced traders are taking their profit up here. Now in come the rookies. Don't pick the top. Let the buyers try a couple times and use their stops, right? Remember, think about this situation. In this situation, everyone's a seller. Right? Everyone's a seller. Why? Because the buyers who bought low, they're selling out of their positions. The sellers who see this range, they're selling because they're selling at resistance above a range magnet. And then once the rookies get stopped out, they become bears again. They are sellers because the buyers get stopped out. They got nowhere to go besides selling out of their long positions, right? So that's 2-try failure off the high. All right, guys? So a number of different entry patterns we can use on the crude oil. Remember, keep on buying low, selling high right now on oil until we see a breakout of this trading range. All right, the game plan is ready for tomorrow. And I'm sure there'll be something I missed here tonight on the video. I try my best to anticipate all the best trades that are coming for tomorrow. We game plan tonight, but don't forget, tomorrow morning, every morning, we'll get together in our trade room, 8 o'clock Eastern time. That way we'll be ready for anything the market throws at us. I'll put all the important links down in the description of the video here tonight. The free class links, the trade room links, the membership links, everything I'll put down there for you in the description of the video tonight. So grab those links and get joined up, and I'll see you tomorrow morning or sometime soon in our morning trade room. If you need any help along the way, any help with getting access to any of those video classes, don't be afraid to call the office, and we got live chat as well. All right, guys? So don't be a stranger. Give us a call or use live chat. We're here to help if you need us. In the meantime, though, let's get out of here. Enjoy the rest of your evening. Thank you so much for tuning in and watching here tonight. If you're still watching right now, you are the person I do these videos for. So great job, great effort. Thank you so much for sticking around all the way to the end. Enjoy your evening, though. We'll see you guys tomorrow morning in the trade room. If not, we'll come back on June 20th. I will see you guys next time. Hopefully, though, I'll see you in the trade room at some point soon. Be well, be nice to each other, and you better be here next time. Adios, amigos. Bye for now.